Good morning and welcome to our daily crypto news podcast. Today's episode is packed with exciting developments and market-moving stories, so let's dive right in.
That's right. One of the biggest stories that caught our attention is the exclusive deal between Telegram and the Open Network Foundation, FTON. It seems like Telegram is doubling down on its commitment to the TON network.
Exactly. According to the announcement, Telegram will require all its mini apps, including games with crypto integrations, to use the TON network. In return, Telegram will provide various benefits to projects that utilize the network.
This is a significant move considering Telegram's massive user base and the potential for mainstream adoption. By partnering exclusively with TON, Telegram is essentially creating a closed ecosystem that could drive more users to the network.
That's a great point, and it's not like this is the first time Telegram has shown interest in TON. If you recall, Telegram initially launched its own blockchain project, TON, back in 2018, but it faced regulatory hurdles and eventually had to abandon the project.
Yes, but now it seems like they're reviving that partnership in a more strategic way. By making TON the exclusive blockchain for its mini apps, Telegram is essentially giving the network a second chance.
Moving on to another story that's been making waves, the betting platform Rivalry has announced its support for the Trump Solana meme coin. It's not every day you see a sportsbook embracing a meme coin, but it looks like Rivalry is trying to capitalize on the hype.
That's right. Rivalry is allowing users to bet with the Trump Solana meme coin on various events, including sports, esports, and even slots. It's an interesting move, considering the volatility of meme coins.
And it's not just about the novelty of using a meme coin. Rivalry is actually trying to appeal to a specific demographic that's interested in alternative assets and decentralized finance.
Exactly. By embracing the Trump Solana meme coin, Rivalry is positioning itself as a platform that's open to innovation and willing to take risks. It's a strategy that could pay off, especially if the meme coin gains more traction.
These two stories set the stage for our discussion today, which will focus on the intersection of blockchain, mainstream adoption, and the role of decentralized finance in shaping the future of the crypto market.
We'll be exploring these themes in more depth throughout the episode, so stay tuned for more insights and of his analysis.
Building on what we discussed earlier about the increasing adoption of AI in various industries, we have some fascinating news coming out of China. The country is set to host the world's first AI marathon race where 0 humans will compete against an army of humanoid robots.
That's right. This 21-kilometer race in Beijing's Daxing district is going to be a real test of endurance for both humans and robots. With over 20 companies participating and bringing their best walking robots to the table, it'll be interesting to see who comes out on top.
What's striking about this event is that it's not just a tech demo. The stakes are high and the competition is real. It raises questions about the potential applications of AI in various fields, including sports and fitness.
Absolutely. And speaking of high stakes, let's take a look at the current state of the crypto market. We've seen some significant price movements in the past 24 hours, with Bitcoin continuing its rally.
That's right. Bitcoin is currently trading at $102,783 with a 4.37% drop. Ethereum is at $3,268, down 2.37%. But the real story here is XRP, which has hit an all-time high.
XRP's price surge is certainly noteworthy. It's up 7.55% and trading at $3.08. Other notable movers include Sol, which is down 7.52%, and ADA, which has dropped 8.1%.
It's also worth mentioning that Trump has announced plans to make crypto a priority. This could have significant implications for the industry as a whole, particularly in terms of regulation and adoption.
We'll be keeping a close eye on this development and bringing you updates as more information becomes available. In the meantime, it's clear that the crypto market is as volatile as ever, with prices fluctuating rapidly.
As we continue to navigate this complex and ever-changing landscape, it's essential to stay informed and adapt to new developments. We'll be back with more news and analysis after this break.
And don't forget to tune in tomorrow for our special segment on the future of AI in the crypto industry. It's going to be a fascinating discussion that you won't want to miss.
So we just discussed how institutions are increasingly showing interest in Bitcoin, and it seems like that trend is continuing. Another company has just made a significant investment in the cryptocurrency.
That's right. KULR, the energy management systems maker, has spent $8 million buying more Bitcoin. This brings their total holdings to 510 BTC with a total spend of $50 million.
That's a substantial investment. What's interesting is that KULR announced a Bitcoin buying strategy back in December, and it seems like they're sticking to it. They've even reported a year-to-date Bitcoin yield of 127%.
Those are impressive returns. It's clear that KULR is committed to its Bitcoin investment strategy, and they're not the only ones. We've seen a number of institutions and companies making significant investments in Bitcoin and other cryptocurrencies.
Speaking of institutions, Bitstamp is another company that's making waves in the crypto space. According to sources, they're planning to roll out regulated derivatives trading in Europe.
That's a big deal. Bitstamp is one of the longest-running cryptocurrency exchanges, and they hold a Markets and Financial Instruments MiFID II license. This allows them to offer regulated financial products, including derivatives.
Exactly. And with this license, Bitstamp is planning to launch a fully regulated perpetual swap offering. This will give European investors access to a new range of crypto derivatives products.
This is significant because it shows that Bitstamp is committed to operating within the regulatory framework. By offering regulated derivatives products, they're providing a safer and more secure way for investors to get involved in the crypto market.
And it's worth noting that Bitstamp is currently being acquired by Robinhood. This deal will likely give Bitstamp the resources and expertise they need to expand their offerings and reach new customers.
That's right. The acquisition will likely be a game changer for Bitstamp. And with their plans to roll out regulated derivatives trading, they're well positioned to become a major player in the European crypto market.
It's clear that the crypto space is continuing to evolve and mature, with institutions like KULR making significant investments in Bitcoin and companies like Bitstamp offering regulated derivatives products. It's an exciting time for investors and enthusiasts alike.
Absolutely. We'll be keeping a close eye on these developments and bringing you the latest news and analysis as the crypto market continues to grow and evolve.
We just wrapped up discussing the growing trend of governments adopting and experimenting with cryptocurrencies. Now we have a rather interesting example that's making waves online. It seems that the Department of Government Efficiency website, led by none other than Elon Musk, has a surprise for Dogecoin fans.
That's right. If you visit their new DOGS website, you'll notice that it prominently features the official Dogecoin logo. Not only that, but they've also added some charming Doge SC art to the site. This is definitely a unique way for the department to express their enthusiasm for the meme coin.
Elon Musk has, of course, been a longtime supporter of Dogecoin, frequently mentioning it on his social media channels. But seeing the logo on an official government website takes this to a whole new level. It raises questions about the potential role of cryptocurrencies in future government initiatives.
Building on what we discussed earlier about governments and crypto adoption, this could be a sign that we're moving closer to a more widespread acceptance of digital currencies in the public sector. Perhaps the Department of Government Efficiency is testing the waters, so to speak, by embracing Dogecoin in such a visible way.
Speaking of embracing cryptocurrencies, let's shift our attention to MicroStrategy, a company that's been making headlines with its massive Bitcoin purchases. For the 11th consecutive week, MicroStrategy has increased its Bitcoin holdings, this time adding 100 BTC to its portfolio for a staggering $1.1 billion.
This brings their total Bitcoin holdings to an impressive 461,000 tokens. It's clear that Executive Chairman Michael Saylor is committed to making MicroStrategy a major player in the world of Bitcoin. As we've discussed before, MicroStrategy's aggressive Bitcoin acquisition strategy has been a topic of interest for investors and analysts alike.
With this latest purchase, MicroStrategy is further solidifying its position as one of the largest institutional holders of Bitcoin. It's worth noting that the analyst who reported on this story owns shares of MicroStrategy, so there's definitely a vested interest in the company's performance.
As we continue to monitor MicroStrategy's Bitcoin accumulation, it's essential to consider the broader implications for the cryptocurrency market. With major players like MicroStrategy and governments exploring the potential of digital currencies, it's an exciting time for the industry as a whole.
And with that, we'll keep a close eye on these developments, bringing you the latest updates and analysis as the story unfolds.
As we wrap up today's episode, let's revisit the CoinDesk 20 performance update. We saw ADA taking a hit, down 3.2% and leading the index lower from Monday. What do you make of this drop, and how does it fit into the broader market landscape?
To me, it's not entirely surprising. We've been discussing the volatility of the crypto market all week, and this is just another example. What's interesting, though, is that Hedera HBAR also joined Cardano ADA as an underperformer, declining 2.4%. This might suggest that investors are getting cautious and reassessing their position.
That's a great point. And looking at the CoinDesk 20 index as a whole, it's currently trading at 3,890.01, down 0.4% since Monday. However, it's worth noting that 10 of the 20 assets are trading higher, with leaders like DOT plus 1.9% and POL plus 1.5%. So it's not all doom and gloom.
Exactly. And this brings me to the introduction of the CoinDesk 80 index. By diversifying exposure beyond the top 20 digital assets, this new index might offer a more stable and representative view of the market. What are your thoughts on this development?
I think it's a great move. As the crypto market continues to grow and mature, investors are looking for more sophisticated tools to manage their risk and exposure. The CoinDesk 80 index could be a valuable addition to their toolkit. And with Bullish Exchange already listing a perpetual futures contract tied to the new index, it's clear that there's demand for this kind of product.
Absolutely. This could also be a sign of the market's increasing institutionalization. As more mainstream investors enter the space, they'll be looking for reliable and comprehensive indices to guide their investment decisions. The CoinDesk 80 index might be an important step in that direction.
So as we close out today's episode, what are the key takeaways for our listeners? How should they be thinking about the current market landscape and the developments we've discussed?
For me, the main takeaway is that the crypto market remains volatile, but there are also signs of maturation and growth. The introduction of the CoinDesk 80 index is a positive development, and investors should be keeping an eye on it. As for the current market outlook, I think we can expect more of the same, ups and downs, but with a general trend towards greater adoption and institutionalization.
Well, that's all the time we have for today. Thanks for tuning in, and we'll catch you again soon.
Until next time, stay informed and stay ahead of the curve.